Hi everyone, today we're going to do a little bit of an update into this stock that is $4 and it's been on absolute fire. It has had amazing 2021 and looking into 2022 it's signing some major partnerships that is going to see the revenue increase a massive amount. So we're going to take a look at this because the business is going like this but the share price is going like this, and I think it's a massive buying opportunity in this stock. And the big thing with this one is just summing up what kind of stock market we're in for growth stocks. This is one of those stocks that are just bringing out positive news, and even yesterday they brought out a major partnership out, and what happened? The share price went down. The stock price was reacting, oh that's going to make more revenue for you in the next few years. Yeah, we're going to sell you off again today. And it was one of those that just kind of sums up where we are. This company announces a major partnership, but the share price goes down, and as it keeps going down and that share price starts going down but everything inside the company is moving in the right direction, this comes more and more of a buying opportunity. And right now with this one I see an easy 2x, but in the longer term I'm starting to see this stock with a 5x, 10x potential when you go to the 5-year, 10-year spectrum on this one. So we're going to take a little bit of a look at this one. So this stock is Hims and Hers. I've not talked about this one for a while just because there's not been really too much news about it. People sometimes get a little bit offended because they're like, oh, you haven't talked about this stock and it's going down. Generally, I won't talk about stock price movements unless there's some sort of news really about it. And now we've got some news about it, I'll talk about it. But just because I'm not talking about it doesn't mean I'm not bullish on it anymore. I am always bullish on Hims and Hers. I probably will be for the next few years. But yeah, once again yesterday, this company brought out amazing news, like I said, and boom, it went down in share price. Originally in pre-market, it actually shot up. It was up a good 7%, I believe, at one point, and then it just sold off as more as the day went on, and we actually ended up being negative on the day. And when I show you the partnership, you just it sums up the bear market that we're in. We bring out good news, a massive partnership that's going to bring in revenue of massive revenue in, and the stock market goes, no, I sell it off. You starting to look at businesses and going, don't bring good news out because it just sends the share price lower. That's what we're kind of in right now. But this stock has been absolutely destroyed. I think that what previously happened is that it did get caught up into a little bit of a hype. But as the share price started falling, towards the back end of last year, I started picking this stock up around about the $8 mark and averaging in. I'm about down 30% or something on this one right now. But I don't mind that because with the prices that I'm picking this up at a 942 million market cap, I think it's pretty good. When you look at what this company was valued at previously, I think back in 2019, this company was valued at a private valuation of 1 billion, and then considering this stock came on as a SPAC, valued, I think it was at 1.7 billion or something around there. I think it came on at 1.7 billion, and since then the company's lost half its valuation, but in that time the revenue has nearly doubled. It's signed major partnerships. You're looking at that going, okay, that don't make sense. And that's exactly it. You're buying a company here that's lost so much value, and you look at the progress it's made since that time, it's been absolutely fantastic, and the partnerships it's made is absolutely fantastic. But yesterday what happened? So this is the news that came out. So you can see here 20th of the 1st, 2022, Hims and Hers and Walmart, I mean, come on, that is such a major partnership. Collaborate to expand availability of hair care offerings to 1,400 stores, which is that's still good. I mean, there's still room for a bit more expansion there. But 1,400 stores, which is good. And the big bit, which I like, is nationwide and online. So obviously online is a massive area as well with Walmart. So yeah, this is going to obviously bring in a lot more revenue into the business. And once again, you're looking at that going, oh, this it sold off after this news, and you're just thinking, this is fantastic. The revenue this is going to bring in for the next 3, 4, 5, 10 years, how long the partnership goes for. And then you go back to the share price and it sells off, and you're just kind of just sums up where we're at with the stock market. This is amazing news, and then we sell off on it. And then just to top it off, you look at the amazing partnerships that have just been announced in really the last 3 months. I'm not even talking through 2021. If I went through all the partnerships that have announced in 2021, this would be a really long segment, and I don't want to make it that long. But if we just go through the last few months, look at all these partnerships that are going to add into this business in the next coming few months. You had here Hims and Hers to offer its health and wellness products in Amazon US stores. So obviously that is even bigger name than basically Walmart. So yeah, obviously that's amazing. You look at this one here, which is the availability of personal care offerings to 208 stores. and that was the Vitamin Shoppe. I've not actually heard of them, guys. Don't know if you guys have, but obviously 280 stars is great. And then another one, so that one was on the 10th, the 11th of the 10th, and this one was on the 14th of September, back in 2021, which was Hims and Hers partners with Revolve, and they were going to sell their products on Revolve.com, which is a stock I used to own, which was fantastic as well. So I like Revolve. But once again, you look at all these partnerships in the last 3 months. These are partnerships that haven't even come into the financials yet. So you think about the partnerships they have that will add to the revenue is great. And this is why this company is absolutely smashing it. If we go back to the guidance of 2021, you'll look here, the guidance originally was revenue to be in the range of 195 million to 205 million. If we look what they did last year, if we go on to the average estimate, because obviously Q4 hasn't closed yet, 264 million. 264 million. I'm just going to do that one more time to show how impressive that is. The guidance was 195 to 205 million. They're now expected to do 264 million. Guys, come on. This isn't a slight beat. This isn't just, it's just slightly outperforming what they said they were going to do or what analysts were expecting. This is absolutely smashed it. They've smashed it and then jumped on it afterwards. This is unbelievable. This company is firing unbelievable at the moment. And this is the scary thing here. What they tend to do, Hims and Hers, is they tend to guide quite low down and then over deliver. So last year, so you'll see here the sales growth is going to be 77%. Originally what they guided for was 30%. Now if you look at what is expected next year, have a look at what analysts are doing here. So analysts are currently expecting 32% growth. So their average expectation is for 350 million. Now this is the big thing. This is what they did last time, and you look at all these partnerships we've just gone through, the acquisition, and before that the acquisitions that they made. I'm generally looking at this going, I think they're going to beat this. In my opinion, I've got Hims and Hers could do around 40 to 50% revenue, but generally what they could do, it could easily be even higher than that, 60 to 70% revenue growth. So there's a lot of unknowns here, and I think even going into next year, this expectation can easily be beat, just how it has been the year just gone, because you start working out all these partnerships as well. This is going to be great for this company. And the thing with this stock, it gets caught up in this growth stock and it's unprofitable, so it's unprofitable, that means it's terrible. It doesn't. A lot of people that say that are just negative people or maybe shorts or don't understand growth stocks. Look at this company's margins on this. So the revenue here of the last quarter was 74 million. Look at the cost of revenue, 19 million. Their gross profit is 54 million, and that means it got a gross margins of 74%. They're massive margins. This is very easy to get to profitability. Now the thing is their marketing has gone up a huge amount, obviously to get more market share, and obviously to increase that revenue, which is absolutely fine. That's what you want growth stocks to do. If they wanted to, they could go back down to 15 million in marketing. It means they grow a lot slower, it means they don't capitalise on the market, and it becomes profitable. But what's the point in that? Because they can easily get to profitability. The point is to become one of the dominant players out here. So, all you have to do is say cut that down and you're already profitable. Selling general admin, that's a lot higher. Well, the reason why is because they've got all these partnerships to manage. They've got all these, products to start getting in. Also, when you consider they've made 2 acquisitions, obviously that's going to have a few fees tied to it. So once again, this has jumped up a huge amount. But is that going to affect the company in the long term? No. These things can easily be scaled back a little bit in the future. But right now, get that market share, get more and more revenue. In the future, that will benefit you, because if you've got more and more revenue, that's going to lead to more and more profit. So, the people that are negative on this company are people that either are short or they don't understand growth stocks. When you look at this company and how it's performing, how it's outbeating expectations, you look at the margins on it, it's absolutely fantastic. That's the thing. And this is the crazy thing now. From a valuation point of view, just going from here, total enterprise value 2.18. Back in the start of last year, this was a 13. And if you look at price to sales, it was a 12. It's down at a 2. A 2. This is for a growth stock with these gross margins, with this growth, with how it's outperforming expectations, down at a 2, guys. This is what I mean by this is easy for me a 2 stock, but I'm looking at this as a multi-bagger. This is easily, I think I could easily in the next 5-10 years pull out a 5x, 10x return on this stock because of the valuations it's at. And when you combine that with the growth, this company's growing at like 70%. And even this year, you look at analyst expectations, even if it grows at 30%, that's still amazing. But like we said earlier, this could easily by the end of this year get up to 50% growth. And then you're talking about a company with these gross margins, 50% revenue growth, and then you're looking at this and it's down at the metrics of, a 2. Yeah, the thing is, these metrics are just going to drop so fast because of how fast it's growing. And then what's going to happen as well is if we get to the point where growth stocks come into favour, which obviously they're not right now because this has gone all the way down to $4, but when growth stocks come back into favour, which they will do, and then you start talking about metric expansions, what happens if this starts trading back at something like 4 times sales, 6 times sales, 8 times sales? 8 times sales for a company like this isn't crazy. If you look at the likes of Teladoc, for example, if you look at the likes of a company like GoodRx, which granted is a little bit more profitable, it's not crazy. It's not crazy. And the thing is, a company like GoodRx has the revenue growth and a slight bit of profit. But the thing is, it's not going to be hard for really Hims and Hers to sneak into profit. When we look back at them gross margins, the good gross margins, there's making really good. They could make really good chunks of profit if they want to kind of cut the marketing and a lot of the G&A back. It can happen. So this has an easy path to profitability, in my opinion, and I won't be too surprised if you see in the next 2 years this starts to sneak in a profit, in my opinion. And then obviously as well, you've got a company here that was founded in 2017 that's doing all this already. This is still a fair new company. You've got a founder-led company in Andrew Dudum. He's also got heavy skin in the game as well. And I was listening to an interview recently of Andrew Dunham, and the ambition that guy has, I think this stock has only been punished. He was saying that, I think we're being punished because the stock came onto the stock market too early. You don't normally get these sort of quality stocks or companies this cheap, and it is a quality company. And when you listen to the ambition of this guy, he's ideally wanting this to become a 20 billion company in the next, few years. Well, 5, 10, 20 years. The aim is to get it to a 20 billion company. Can he do it? We'll see. He's in a good time. The company's making all the right moves. I think there's a potential, but even if we're not talking a 20 billion company, can Hims and Hers get to probably a 5 billion company? I think so. I don't think it is impossible in the next 5 years for Hims and Hers to become a 5 billion company. I think it is on. I generally can see it. So yeah, this is just a company here that I wanted to talk about, a company that's making all these right partnerships, positive news, and then boom, the share price goes down. And it's just where we're at with the stock market, stocks in general, growth stocks. You could bring out any positive news you want to right now and they would go down. So yeah, and the thing is as well, you're looking at a company here that isn't even at crazy valuations either. So yeah, hope you enjoyed the video anyway, guys. If you are a Hims and Hers shareholder, hope you enjoyed it. Hit the like button if you're new, subscribe, and I'll see you next video.